enjoy the song. We're gonna wait a little bit for people to join the stream. So I screen because I'm doing how the markets work, in what form and in what way. And the beginning of the book, you can just see the picture already of how markets move. Basically, they're moving in waves all the time, ups and downs, and these waves have waves inside, and these waves that are inside have more waves inside, and so on and so forth. But the basic movement of each wave is a 1, 2, 3, 4, 5, and then after that 1, 2, 3, 4, 5, which we call an impulsive wave, you have something called a corrective wave, which is an ABC, a 3-wave move to the downside. And these patterns that you see, believe it or not, I'm gonna show you in the book first, and then I'm gonna go to the Bitcoin chart, and then I'm gonna show you the similarities between these patterns that you see in these books and what happened in our actual rally, basically. So I'm gonna flip here. All of this you can read through this book. It's very good. You can find some PDFs online if you want, which explain a lot of things in the book. But the number one thing that I want to go to is, let me see where that is. I think it's like page 15 or something. Yeah, this one. This is the main thing that I want to talk about for everybody. So here you can see something called a bull market truncation, and here you can see bear market truncation. So basically these bull market and bear market truncations are basically Elliott waves that come in 5 impulsive waves, but they are irregular Elliott waves. So usually when you study Elliott waves, you know that the 5th wave needs to be the highest of these waves. So basically, if you have a move to the upside or to the downside, by the way, 1, 2, 3, 4, 5 to the upside, or a 1, 2, 3, 4, 5 to the downside, you need the 5th wave to be higher than the 3rd wave. always. Now, when this doesn't happen, for example, for bull market truncations, as you see at the top left of the screen, this is called basically an irregular Elliott wave. It happens, but we call them like this because they are irregularities. They happen sometimes, not most of the time. And you can see at the bottom, figure 112, it's called the bear market truncation. So these Elliott wave irregularities happen usually in bear markets, not in bull markets. Now, by bear and bull, I don't mean small time frames. We're talking about huge time frames, about daily time frames or monthly time frames. When you spot these, you should know that these are warning signs of where you are in a market. One more thing I want to show is, I'm going to zoom in slowly here. And I'm gonna show you this right here, and I want you to try to remember this picture and put it in the back of your head. This is basically a bear market that happened with a bull run with a bear market, or with the start of a bear market, and you can see clearly the Elliott wave formations that are happening in your bull run. So you have your 1, 2, 3, 4, 5, and then you have your correction to the downside. So your A, and then your B, and then your C. And these ABC corrections that happen usually after ends of bull markets. So you have your bull market basically, and then you have your end of the market. These corrections are actually 1, 2, 3, 4, 5 corrections. So I speak a lot about this 1, 2, 3, 4, 5 and this ABC moves that happen all the time. But these 1, 2, 3, 4, 5s that you see here are very rare to find, because this third move is very strong to the downside, and I'm going to explain to you how it fits with a Bitcoin chart, with this this third wave basically in this 1, 2, 3, 4, 5. But main point is, your ABC corrections are very small compared to your bear market starts or bull market starts. And you can see here, so I don't want to be biased to being a bear or something, because I'm just showing you the charts, what they show, right? I want you to see the bull market truncation, which is a 1, 2, 3, 4, 5 move to the upside with subwaves as well. And then I want to show you how it looks. It looks like you're going in an uptrend with higher highs and higher lows. And then the bear market truncation, you can see the lower lows that are being made all the time. Lower lows, lower highs, lower lows, lower highs. And obviously you can see there are some impulsive waves inside these waves. Okay, so these are bear markets and bull market truncations. And you just saw a picture of what a bull market that ends looks like, basically. You have your 1, 2, 3, 4, 5 waves to the upside. And then you have your 1, 2, 3, 4, 5 waves to the downside. And this is basically your end of a bull market. Okay, that's one thing I want to talk about. Another thing I want to talk about is this inverted flat formation that I was talking about in my previous video. So you can see this book is so amazing. It has so much information. So yeah, this is right here what I talked about in my last video. It's called an inverted flat bearish formation, a bearish pattern. And this inverted flat just basically is characterized by an ABC move, which comes in a 3, 3, and then a 5. So basically you have a 1, 2, an A and a B, which consists of a 3 and a 3 move. And then you have a C wave, which goes way beyond the A wave and moves in a 1, 2, 3, 4, 5. And then after the peak is reached, you have an ABC correction as well. Every time you have an impulsive wave, you need to have a corrective wave after. And you can see here when I'm zoomed in, you can see how nice this looks. You have your A wave, which consists of a 1, 2, 3, and then your B wave with a 1, 2, 3, and then your C wave with a 1, 2, 3, 4, 5, and then an ABC correction again. And these expanded flats, like I talked about in my earlier video, they are usually found in bear markets, not in bull runs. You rarely find them in a bull run. You usually find them in a bear market. Okay? So I just wanted to share that. Take that into consideration. Keep it in your head. And I'm going to go now to the actual charts. And I'm going to show you what we found, or what I found. And I'm going to show you how it fits with this whole truncation that I'm talking about, the bear market truncation and the inverted flat that I'm talking about. So let's go to our charts and show you guys. So we have our main chart right here, our Bitcoin chart, our BTC chart. And then we had our bull run basically, which is similar to what we just saw in the book if I just minimize it slightly, you can see how our bull run is consisting of 1, 2, 3, 4, 5 waves to the upside, and then a 1, 2, 3, 4, a 1, 2, 3 correction. The first thing I want to talk about is that this move right here, for me, if you followed me on Twitter or if you've followed me on YouTube, you know that for me, this move is a wave 1. All of this is a potential wave 1, right? It's a big Elliott wave that has smaller subwaves inside. And these subwaves, like I told you, travel in 1, 2, 3, 4, and 5. And these subwaves, these 1, 2, 3, 4, 5 subwaves also have subwaves inside them, as you can see. But the key rule of Elliott is every time you have an impulsive subwave, so every time you have a strong move to the upside or a strong move to the downside with these 1, 2, 3, 4, 5 formations, it's followed by a second wave, a wave 2 basically, which is consisting of an ABC correction. So a 3-wave correction basically. These ABC corrections, you can find them a lot. And I'm going to show you in the charts how they're easily spotted, by the way, in this bull run, in this current bull run. So here's your wave 1 of the bull run, your huge wave 1, because we are in a huge bull run in the future. We're going places in the future. But currently this huge wave 1 consists of a 1, a 2, a 3, and a 4, and a 5. This is our Elliott wave, our subwaves. Our 1, 2, 3, 4, 5 waves, which you also saw clearly in the book. Then after this, you can see that these are very likely Elliott waves, because every impulsive wave, like the 1 and the 3 and the 5, they are always followed by corrections, ABC corrections. So you have your impulsive wave, and then you have your A, B, and then your C. And then your second impulsive wave goes again, also plays again. And then after your top is reached, you also, again, you have your A, B, and C. So your A, so I can show you properly. Your A, your B, and your C. So these impulsive waves always come with corrective waves. And during this impulsive wave, like wave 3, like let's say, it had a huge wave 3 to the upside. So it had its 1, 2, 3, and a 4, and then a 5, which is right here, basically. Okay, it happens, and if you zoom in lower time frames, you can see them more clearly. You can see the waves. So I'm gonna try to zoom to the 4-hour and to show you the waves playing out in these impulsive waves, like the third wave. And then you can see the waves, how they work. So this is just these scribbles that you see here, these waves pumping up. These are actually subwaves of this subwave. But you can see you have your 1, your 2, then your 3, and then your 4, and then your 5. And your 3 has your A, B, C correction, and then your 5 after that has also your A, B, C correction, which comes here in confluence with wave 3. So basically, all of these Elliott waves, now we have established that they have an ABC corrective wave, and then we have a bullish impulsive wave to the upside. Now, what is important for me is what I showed you in the book. So what I showed you in the book is that bull runs usually end with big corrections, which measure actually 5 waves rather than just a 3 wave. And I'm saying this because these 5 waves that I'm talking about, these 1, 2, 3 waves need to be 5 for specific rules. So I'm gonna go back to the book and just remind you of this scenario that we. So this is your inverted flat. So no need to talk about it. I'm gonna go to your bull run end. So you can see you have your short-term ABC correction, but because this C correction, this third wave to the downside, is so big, then Elliott says, or a rule in the book says, that if wave C, or the third wave of a corrective wave, is around the 1618 Fibonacci retracement for wave C, basically is 1.618 from wave A, then this wave C, or this third wave, needs to be part of a larger wave, of a 1, 2, 3, 4, 5 wave to the downside. And these larger waves, these 1, 2, 3, 4, 5s to the downside, usually happen only during bear market ends. So bull market ends. So when a bull market ends, you will see these ABCs, which consist of a 5-wave rather than a 3-wave. Okay? I hope you're following along with this. I know it gets complicated, but it's worth it. It's worth it. Trust me, it's worth it. So now we have established what a bear market looks like, or the start of a bear market looks like, and the end of a bull run, what it usually looks like, according to Elliott and according to many other TAs out there. I'm just gonna check the chat to see that if everything is okay or no. I'm gonna go through all your coins, I promise. Every coin, I will try to go as much as I can with many altcoins, analyze as much as I can. But I want to go to this because this is super important to understand where we are in the bull run. So now we have established that if a bull run ends, you need to have an ABC that consists of 5-wave move. And this ABC is usually characterized by a C wave that retraces to more than 1618 of your A wave, basically. So here we go. You have your 1, your 2, your 3, your 4, and then your 5. And your impulsive waves have an ABC, ABC. Your 5th wave right here, which is the all-time high for Bitcoin, needed to have an ABC as per Elliott. And this is your ABC, A, B, and then C. So people right here, or many analysts who forget Elliott and the importance of waves, probably just assume that this is an ABC, which is a normal ABC that happens in usual bull runs or whatever. If you take your Fibonacci extension from the top of your wave A, which was the drop, right, basically, to the bottom of your wave A, and then you extend it to B to measure the retracement of this wave C, right? Then you get that wave C went to the 1618. And as per Elliott, if you go and search, by the way, and I showed this in my last video, if you want to go watch it, it's the information is there. As per Elliott, if wave C is 1618 of wave A, if this corrective wave is 1618 of this wave A, then this wave C needs to be part of a bigger wave, of a